Good morning, good morning. Hey, buddy, how you doing? Well, gee, morning, everyone. Gee, I wonder where the shorts are trapped. I wonder where the shorts are trapped. Any clues? Hey, Matt, how's it going? Welcome to all those who are joining us on YouTube. Um, I'm JJ. This is tradingsyndicate.org. This is where we teach real people how to make real money. No excuses. And yeah, so the shorts are trapped right under 76.17 for two sessions now. So it seems they all went running into the same area shorting and got trapped. Now, here's the cool thing about market profile. Traditional market profile is a pain in the ass to learn because unfortunately the way it's taught is very sort of scholastic and not at all practical. But there are two profile shapes, right? There are two shapes of market profile that tell us really quickly what kind of business is going on, right? So old guys like me who are market profile guys, there's a very simple way. There's something called a B profile, right? Which looks like this, right? Looks like a lowercase letter B. And the other one is a P profile, which looks like the letter P, okay? The B profile means that you'll have like liquidation and it gets trapped or caught right here, like a catcher's mitt. Now, I know this is the UK European session, so there might not be a lot of New York Yankees fans here, right? Yeah, kind of, they look like musical notes, right? But this is what happens is when you get liquidation, when you get selling, right? Liquidation is a fancy way of saying selling, right? When markets sell off and people are buying big positions, they get accumulated here, right? The P profile shows a move up and the base of this letter P, that's where the shorts are trapped. And it goes back and forth like this in the top of it. There's only two profile shapes. Now, some people say there's a D and an X and a Y, and they come up with all sorts of shit. There's only B and P, okay? B profile is, they say long liquidation, but they, as usual, leave out the last part. A B profile means long liquidation into wholesale and short covering hands. That's what the B is. That's why there's a concentration of volume in a tight range after a liquidation. Someone's buying the crap out of it, right? Other people might use the word absorption. Absorption is another word that retail traders use, right? Like bounty, the quicker picker upper, like a paper towel, they're absorbing the selling in that area. The P profile means, and usually what happens is after a liquidation, you get these P profiles. This is not a, this, if this had been a perfect B profile, it would have been like this. But you can still see that all the crap from the liquidation has been bought in this area and it's been sold, but they will shut off the selling at 17. So at the base of this P is where, yeah, it's like a catcher's mitt, Raj, right? The B is like a catcher's mitt. The P is, let's force it higher, and when we get down to this level, we stop selling. So when they stop selling here, the reason you stop selling is because you see a bunch of buyers. So I want you guys to rethink levels. Think of a level as a glass door, and the sellers are on this side of the glass door, and the buyers are here. If the sellers see a whole bunch of buyers lining up outside that glass door, they will raise price. Because that's how markets work, right? So sellers are here. There's the door. This is pretend it's Walmart, right? And the buyers are here. And the buyers are getting out of their car and they're lining up in front of that door, right? Just like Black Friday, right? So that's why, they overwhelm the security guard, knock everybody out, and bum rush the store. So think of this as a glass door. When the sellers see buyers lining up, they do this. Now what happens if the buyers aren't lining up? The sellers are here, you got the door, and the buyers are down here, right? Well, the sellers will go to the buyers, right? Because they have to get rid of their product. And that's why price goes down. And that's when you have a short, right? Does that make sense? Can you visualize that? The sales chart is telling you when the sellers and the buyers, when there's change, like, oh, there's always buyers at 19. And then for a little while now, check it out, right? We've had buyers at 19 all night, but just in the last little while, right, we had to put it on sale. And now they're trying to raise price, but the buyers don't want to pay more than 19, so we'll sell it to them where we can. Now, the reason they can do it is because of cost basis. The sellers always have a cost basis that's lower, right? And that's how wholesale works. You're buying coffee for $5 a bag. The guy buys it for $3 and sells it to you for $5, right? That's commerce. The chart you're seeing is a sales chart of how sales are going tonight. So the market opened. There were no buyers off the open. Big, big, deep discount, and boom, they came in. They came in hard and fast. Now, what happened last night on the open is the market sold off and everybody got caught short when it ripped back up. They got caught short, and they got caught short here and here and here and here. So that's why it's bid like crazy down here at 76.17, right? This is what we call, have you guys ever heard the term market structure? Anyone? You've heard that term, it gets tossed around a lot. This is all market structure is. Market structure is just telling you where shorts are trapped, where longs are trapped, where the position is, where the inventory is priced. Market structure is just a fancy way of saying where business is being done. That's all it is, right? And the chart shows you the market structure, and it tells you how sales are going. Oh, can we raise prices, right? It's like when you're selling hot dogs, right? I remember a story about, Gold's Gym, Venice Beach in the 80s and the 70s. There was a guy who would go outside Gold's Gym and put his hot dog cart out there. And all the roided up bodybuilders, when they came out, they were so hungry from the smell of those hot dogs, you sell a lot of them, right? So, when you get a lot of demand, you can raise price, right? So the sellers are always trying, it's not a control thing, it's a commerce thing, right? Remember that, my friends. It's not control. They say buyers are in control, sellers are in control, aliens are in control, right? It's not control, it's commerce. Okay? It's just simple commerce. The sellers are always trying to find that sweet spot where people will come in and buy. They want to they want to raise the price as much as they can, but they don't want to raise it too much to drive away the buyers, right? So that's that constant moving of the offer that you see. You see the red line, right? It's slow, so I'm going through this right now because there's really nothing to trade yet. That red line is the offer. The offer is the it's the lowest available price you can buy at. The bid is the highest available price you can sell at. The offer is what controls the market. Okay? The offer are the size sellers adjusting price according to the amount of customers, buyers that are in the market. So if there's no buyers in the market, let's lower price to see if we can get them to come in, right? This is simple, basic market mechanics that no trading room teaches. And that's why traders don't make money, because they don't understand the simple basics of commerce. Right? This is just commerce. This is the largest commercial place to do business in the world, where trillions of dollars transact every day. Trillions. It would put Dr. Evil to shame, right? So the sellers don't control the price. They set the price according to, now here's a term that has been bastardized, order flow. Order flow trading, order flow tools, order flow, order flow underwear. We're selling order flow deodorant. We're selling order flow baseball hats. We're selling, order flow toilet cleaner, right? Order flow is the most bastardized marketing term in trading ever. Order flow just means customer flow. And if they told you it was customer flow, right? Can we get a market with lasers on? Exactly, Cisco, right? It's just the flow of customers. So if there's no customers, you got a lower price. Pretend your ES contracts are bananas or fish and the shit's going to go bad. You got to get rid of it, right? You don't want to be sitting there holding a bunch of ES contracts when everybody sold theirs and you're sitting there, going, oh, what's happening? I can't make any sales, right? You guys understand the picture that I'm trying to paint, right? That's all this business is about. It's about the distribution, in this case, of ES contracts. Now, let's go look at the profile. There's the P profile. There's that J-low liquidation, right? K period opens, can't get down there, right? London is going to open in, what, half a minute here? Right. Let's see what kind of business comes in. Look at that. Look how these algorithms are so freaking cool. You can mark off exactly where the sellers are going to be, and it is accurate to the frickin' tick. Now London's opening. London doesn't know what to do. Usually London likes to take price and jam it lower, but we have these single prints from yesterday that did not fill. They filled in the overnight, but they're still valid because it's not RTH. So let's see if London can come down to that 14. If it can't, it's just going to be this choppy sideways mess. Now, inventory, my friends. Inventory is almost 100% short, except for, I think, 48 contracts. So out of 78,000 contracts, other than 48 contracts, inventory is short. That's not a good thing, because everybody's expecting lower. Inventory is almost 100% short. That's why there's this frickin' perma bid here that we can't break. Now, what did I not mention? One thing I have not looked at is what do we have for news? I haven't even looked at news this week. Anything interesting today? ADP employment, Fed speaker, blah blah blah, PMI. Nothing at 8:30. Stuff at like 9:45. Tomorrow we have jobless claims. Look at that. There's a Fed speaker giving a speech on a Saturday. Saturday at lunchtime, Fed Governor Michael Barr speaks. Well, I guess he gets a free meal. How do you get a job as a Fed speaker? That'd be a good job. Everybody likes you. Everybody gives you like these really nice free meals at fancy restaurants. I mean, imagine you don't have to work that hard, right? Just kind of show up and look pretty. Oh, I'm getting into trouble now. Exactly, Moran. Right? Now, here's the thing. Because there's no really big news event that's causing the market to trade like this, we have to wonder what the hell's going on. Oh, I'd love to be a Fed speaker. I'd get to wear a suit again. You know, it's been decades since I've worn a suit to work. You know? I do miss working in an office. I know all you guys like working from home now, but you know, I sometimes I miss working in an office. So why is it trading like this? Well, when is contract rollover? Today's the 6th. What is contract rollover on the 15th? It's kind of mid-month, right? So we have this week and we have next week to roll over this damn contract. Now I want to show you something. The new contract is trading at 68.80. Freaking thing is 60 points higher. Right? That's nuts. So we have a lot of short covering before the contract rollover. That is creating this sort of bunged up order flow, right? The closes here, the overnight lows is like 2 ticks underneath. Now let's see. London has no choice but to move higher. The overnight point of control is at 21. We know we have sellers here. So if you are going long, right? And the only reason that you'd be going long is that you see bids, right? So say I'm buying the 20s, right? Long 20 and a quarter. I know there's going to be a seller at 20 and a half. So how do you play this? You buy a few at 20, 20 and a quarter, and you try and maybe buy some at 19 and a half, but you're going to use VWAP as your out, right? Because VWAP's 19. So if it breaks 19, right, you run for the hills, right? So you buy a few contracts at 20 and a quarter, right? Now we're 20 and 3/4 offered, right? See how it kind of gapped up there and didn't print? Interesting. So I'm long 2 at 20 and a quarter, just micro, because I'm just testing this out. And I think there's going to be a seller up here right before 21, so I'm going to offer one out at 21 and a quarter and see whether or not I can make a point, right? And what we're going to do is we're going to take this cheap crap that we bought under VWAP for the last hour and a bit and try and sell it up here. It's not a lot. It's not the greatest trade in the world. I'm just testing the order flow, right? I'm just testing to see whether, and I don't mind if I get stopped, right? I'll put another bid in at 19 half. So I've got two long at 20 and a quarter, 19 half bid. I've got a lookout stop at 18 and three quarters. If that gets taken, then I know that I got to get out of this position, right? I've got an offer at 21 and a quarter to see whether or not I can get a print up there. This is order flow analysis by sticking your fingers in the dirt and seeing if you can actually get a print. I'm out one at 21 and a quarter. Hey, how's that? I'll put another order at a half for my last contract and see if I can get a print. Right? I was lucky on that quarter print. Right? I'm not trading this to make money. I'm trying to get a feel of the order flow after this chop. Right? We know there are going to be sellers up here. Right? That's why we're offered. Right? So I'm still long one at 20 quarter. I'm bid 19 half. My lookout offer is 18 and three quarter, which is right underneath VWAP. And my sell order is 21 half. Right? And what I'm trying to do is I'm trying to get some market intelligence. Right? I'm not putting together a big position or anything like that. The trade is based on the look below and fail. I'm out at half. So that's cool. Okay, so I was testing the bid. The bids are there. Right? All-time high, erratic order flow. Exactly, Phil. This market does not know what to do. Every time it sells off a little bit, right? Everybody chases it down, gets trapped short, and whoop, back up. Right? It's a story as old as the hills. Of retire in Hawaii. I can't wait to retire in Hawaii. Buy a little house, get myself a ukulele. I'll be set. Yeah, Phil. It's not the best trading environment for extracting alpha, right? Now, as the morning progresses, right? As the morning progresses, hopefully, we get some more participants, we get some more order flow, right? There's a ton. Oh, yeah, here's the thing, too. Now, I've been teaching people to trade at the edges. But lately, this market has been spending a lot of time away from the edges. So yesterday, one of my students and myself, we were working on trading, trying to incorporate Steve's 9 EMA on a trend trade when the market breaks and you're away from an edge and how to buy a pullback. Much more difficult to do that because you have to be able to execute ruthlessly and manage your risk ruthlessly. Right? So there are A plus setups, and A plus setups mean, for me, an A plus setup means that it's easier to manage my risk. I'm not going to get FOMO'd in, FOMO'd out. I won't lose my nerve. I can be a little slow on my execution. But when you go to the B and C setups, brother, your execution better be, you better be spot on in your execution. Right? You have to be able to execute ruthlessly. That's why I want a lot of traders to work on their A plus setups and get their skill level up so they can trade the non A plus setups. Because I hope I don't curse us with this, but I have a funny feeling that the next 6 months of the year, the last half of this year, is going to be a bitch to trade. Because the market's going to change. It's going to change agenda midday. So there's not going to be consistency with the order flow. So we're going to have to be able to adapt. Like we're going to have to be like Rocky and switch to southpaw, right? So what we're doing now is we're taking, now had I been up earlier, right? We're taking position under VWAP and we're finding a place to go retail it out. So the market will move higher because now the shorts are trapped. Basically, the latest short position is under 19, right? Respecting the rules is really it's tough, man. It's this is people are so frustrated. First, they're they've got FOMO, and that FOMO turns to frustration, right? Because you're sitting in front of this damn screen, you're trying to make money, right? Your wife or your husband is sitting there. You've been sitting there for 4 hours. Have you made the rent? No, right? So what are you doing? Go get a job, right? Or go get another job, right? Which isn't a bad idea. Multiple sources of income, I'm a big believer in, right? Um, so people jump into bad trades because they're forced to, right? Then that FOMO turns to frustration, right? And that's what we're trying to stop, or we're trying to help people deal with that in our room, right? Because trading all-time highs with no liquidation is really a wholesale business, not a retail business. And people don't have the patience to wait for wholesale to do their job. I've had to beat it out of you, Raj. I had to. But now you're going to be tested, right? Now you're going to be tested, right? Your patience, your business skills over the next 6 months are going to be tested. When massive volume comes in at the top, but the stock keeps rallying, what could that means the street has taken its symphony trades. If you come into my trading room, I've done a video on exactly the question that you're asking. And it's a video called When the Street Takes It. Right? When massive volume comes in at highs, like in a stock, right, in one of these heavily marketed stocks, it means the street is taking, which means every idiot and his dog and his cat, his possum, his raccoon, the guy who washes his car, they all start buying the same stock at the top. And when the street takes it, stocks move higher because the sellers go, oh my God, thank you, right? It's like one deal we were working on for my buddy Neil. We took the stock from $5 to $7, right? We opened it at like about 80 cents, took it up to $5. Then we took the stock to 7. At $7, I don't know, some trading room or something came in to buy, and they started buying it because back in the old days, trading rooms weren't like our trading room. Trading rooms were set up by promoters, and they'd get like 100, 200 traders in there, and they'd charge them $300 a month, and they'd tell them what stocks to buy. But the stocks they told them to buy were our stocks. So this trading room came in and started bidding the stock up, and we ran out of stock, right? And we ran out of stock, and the stock gapped intraday from $7 to $12. And we called our guy and we said, listen, you got to start selling some more stock. He's like, I'm out. I only cleared this many shares, right? You guys don't know anything about clearing, but he had only had so many shares in the system. So what we had to do is we had to enlist one of our market makers to short the crap out of it and hold the short in his inventory until my buddy cleared more stock, the mechanics of which you guys don't need to understand. But that's what happens, right? That's exactly what happens. When the street takes a stock, for the love of God, don't be short. Now let's see if we go sideways above 22 and sell everything that we bought between 16 and 18, between 21 and 23. That's the business right now. You guys get it? So the business that is occurring is that we're taking this and we're going to sell it here. So think of this as the warehouse. Think of this as the store. This was the highway to get to the warehouse. Is it a great trade for you here? No, it's crappy, but at least you understand what the hell's going on, right? And if you understand what's going on, right? If you understand what's going on now, you're not going to be sucked into FOMO because you know that it's not tradable for you as a retail trader. You can take a look and go, oh, this is wholesale business. This is not retail business. So there are times when the business does not suit you, the retail trader. Get it? And at those times, if you stay out of the market, when the market does not suit your business transaction type, then you are going to be much better off than someone who FOMOs in, gets frustrated, loses their money, blows up their account. Then you don't need to go and sit and talk to Dr. Phil and tell him about your childhood and how your dog ate your homework in grade 3 and that's why you're a shitty trader. Right? Symphony Trades, are you listening to what I'm telling you? Because what I'm telling you right now is way more important than volume dropping and all that shit you're talking about. Please pay attention. Okay? Right? Okay? Don't worry about what you're talking about. You're not going to be able to trade what you're talking about and make any money anyway. It's just, you're just curious and there's nothing wrong with that. But I'm trying to drop some knowledge on you. Right? So you don't need trading psychology if you know what the fuck's going on. Excuse my language. If you don't know what the fuck's going on, you're going to be always looking and going, "Oh, I need a trading psychology. I am, I'm doing this. No, it's just you don't know what the fuck is going on. You don't know what you're doing. If you don't know what you're doing, how the hell can you expect to make any money? Or how the hell can you expect to keep the money that you make if you're lucky enough to make any money? So you got to know when to trade and when not to trade. And this is what I'm telling you. This is wholesale business and there's nothing for you here. So learn that and stop screwing around and losing money when the business does not support your retail trading. It's very simple, right? Most retail traders have no clue when to do business, right? Yeah. Uh, I'll get you to text me. Just email me, okay? And I'll get Steve to reach out to you, okay? I mean, I like talking about stocks and things like that too, but I really want you guys to understand that the markets are going to change, and they're going to change during the day, which is going to frustrate the crap out of us, right? See now they've run out of buyers over 22, so they're going to put it on sale. Where's it going to go? 20. But this is so choppy. Look, there's gaps between the candles. The volume is light. There's no follow through. These are all signs that you should be waiting for your trades, right? We really want to keep you from losing a lot of money. right? Exactly, Phil. Like this is not a place for us to initiate a business because the wholesalers are doing their thing. Let them do it, right? You're not being patient, you're being smart. And when you're smart, you're automatically patient, right? We're going to have to be smarter than we usually are. We're going to have to be faster when we execute than we usually are. We're going to have to trade only at specific times, right? This market is going to drive us crazy. I've already seen it over the last 2 months. People are giving up, right? If you're serious about making a living doing this, this is not, this is the time where you buckle down and you learn. Because what you learn in these markets is going to carry forward over the next 10 years, right? I would say at least the next 2 to 3 years are going to be very challenging, right? Especially in equity indexes. They're really tough to trade, right? Stocks as well. I'm going to be doing some work on equities. I've got a course on investing coming out for people who don't want to trade. You know, I can understand not wanting to trade. You don't have time. You want to learn how to invest. We'll teach you how to invest like someone who actually takes companies public so you understand what you're doing, right? Yeah, you really don't want to like, the stock market's not a good place to look for entertainment, Phil, right? Go see a movie, it's cheaper, right? A movie costs what, 10 bucks, 12 bucks, 14 bucks? It beats losing a grand trading, right? See, and the thing is when you lose money trading, it's not like Vegas where they give you a free meal and a ticket to a show and a free room. You get nothing, right? Your $1,000 is gone in 30 seconds and you don't get anything for it, right? At least in Vegas, when you go and lose money, they give you a free hotel room, right? You don't get any of that in trading. So it's, for entertainment purposes, there are much better ways to spend your entertainment dollar than to put it in the stock market or into the futures market and trade, right? Oh, yeah, and the big IPOs, yeah, right? SpaceX and Anthropic and all of that stuff. It's a brave new world, Phil. And now we're right back to VWAP, right? So the distribution only lasted, right? We don't, we took this and we sold it for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 minutes. We only got to sell it for 10 minutes over 22 before we had to mark the price down, right? Now you could say, JJ, there was a short there, and there was, but I was trying to drop some knowledge, so I missed the trade. And that's okay. There'll be other trades. Don't worry about missing trades. There will be more than enough trades for you guys, right? Just wait a little longer. I'm curious to see, as the morning wears on, if we can get underneath this little green box, because that's exactly where the shorts are trapped, and they're front running. See how the bid was here, right? Then it moved here. Now it's up here, and it's moved up every half hour. So when the next half hour bar opens, look to see, right, where the low of that half hour bar is going to be, right? Not saying it's going to be really tradable, but look how we came right into the position. See, we liquidated, we came right into the position, we stopped, and they raised price, right? That pattern you will see over and over and over again. It's slow enough now. No, you're not going to make a lot of money now, but at least you recognize that pattern. You understand inventory cost basis, putting it on sale when it comes back to cost basis. There's the look below and fail. No follow through, right? But at least, see, I don't want you guys to think that I'm against trading psychology, but I'm for practical trading psychology, right? Exactly, Moran. It's a clear pattern. It's a clear business pattern. That's what chart patterns are. They are business patterns. And at 11 o'clock today, in our room, we were going to be doing a special webinar talking about chart patterns and the mechanics and the business that creates the pattern. Because a lot of people trade patterns, a lot of people trade EMAs, all these sorts of things. We want to help them understand the mechanics of the business that goes behind that pattern, so you're a more informed trader with good information. Not that you've got 20 things going through your head, but you have enough information to make good, qualified business decisions and manage your risk, right? So that's what we're doing at 11 o'clock today in tradingsyndicate.org. And I'm a huge believer in using the trading psychology before you lose money. And this is where I'm at odds with a lot of trading psychologists, because they tell me that you need to lose money to learn trading psychology. They're like, oh yeah, you got to blow up your account a few times. I'm like, if that was how business worked, nobody would ever do business, right? If a business person said, I'm going to open a business and destroy it and then learn from destroying the business, that's not how business works. So they're screwed that way in their thinking. They're thinking, oh yeah, you need to go and lose and blow up 3 accounts before you're going to learn anything. No, because if you start on a trade desk and you start blowing up brokerage firms, right, then Goldman Sachs wouldn't have been around for 200 years. That's not how business works, right? You're really stuck on that gold market, eh, Cisco? What's going on there? I've never traded gold. I've done gold deals, raised money for gold companies, but I've never, oh my God, look at this thing jump around. How do you trade this? Look at it, it's got 1 to 2, the maximum contract size is 9. And there's places on the gold DOM where there's no orders and the price keeps jumping around. You guys are nuts. Well, good. It's, if you can do it, that's great. All right, folks. As we wrap up, thanks for being with us. No, it's not a good short right now, Italian trader. As you can see, the VWAP is right there. You see VWAP is right there, so it's not a good short. You see that? VWAP is the goalie right now. If I were you, I would wait for a bit. Right? Remember, overnight inventory is 100% short. And there are bids here. So the look above and fail down here, maybe I'd short if we broke 16, but there's going to be buyers all the way down here. I would just go and have a coffee and chill and wait. There might be one big candle here and there, but I would definitely wait. Sure. Whoa, sorry. What did I do? Yeah, yesterday, Stelz, when C period took the high of B, people who were short underneath 76.12 are trapped. Right? These guys got cheap inventory at what? What time in the morning was this? Right? You know the early bird gets the worm? So at midnight, some traders were lucky enough to get product under 13. But right now it's not on sale under 13. You get it? All that cheap stuff is gone. Does that make sense? If you were a buyer under there at midnight, then you would have gotten some paper, but not right now. That's why those prints will still be they'll still be effective in RTH because Globex, right? Globex is pure sort of inventory trading, right? But that cheap stuff at 12 midnight, that's not going to be there at 9 o'clock. It may be, but most probably it won't. Good question. Good question. Okay. All right, folks. We will see you at 9:30 Eastern Time. Have a good morning. Spend some time watching the offer. Come see us at tradingsyndicate.org. Thank you. Bye for now.